you. Thanks for joining us.
Thanks for having me.
So we know the US has been a laggard lately compared with Canada or European stocks, but focusing on Canada here, you are underweight, though, our local market.
We're actually underweight, and the reason we're underweight is, given the tariff uncertainty that's there at the moment, right? Heading into the end of the year, the economy was relatively weak, but it seems to have got some traction in the early part of the year. But now with the tariff situation and the uncertainty behind it, things are a bit more of a pause. We're probably going to see, less investment in Canada, and pressure definitely on Canadian companies if tariffs continue to stay at a level that's higher than 0%.
So you're pessimistic. Maybe we could put up a 1 year for the TSX. Do you see any pockets of value in Toronto? Or?
I do. I think that once we get certainty on the tariff side, at least, then I think at that stage, companies can invest. They can price potentially, what that means for their input costs, what it means to, for the consumer side. And I think the fact that the Bank of Canada has been cutting interest rates, and I'm hoping we see more of that, that will be a positive, I think, for the consumer side to start to invest again properly. But again, the key is to get some certainty on where tariffs are going to land.
US, you have moved to neutral at this stage, so you're not selling as such.
Yeah, well, if you go back to probably Q4 when Trump got elected initially, we were very bullish on US equities, about 5% overweight equities. When we got into January, we took that down to about 2.5%, and now we took down a bit more, taking some profits and more to a neutral stage. We still like the US economy. We think longer term, this is where you still want to be. But again, given the valuation that we had seen and the fact that we're seeing some selling pressure, people tend to sell their winners, and their winners tend to be the U.S. equity and particularly some of those tech names. So we're taking some of that weight down, letting it kind of ride in that neutral camp for a bit of time until things settle out, and then we'll likely be buyers again.
Apparently, Trump and his team are sending a signal. We're not that worried about the stock market. We're all about helping Main Street. Of course, it's politics, but we've heard speculation, he'll be disturbed by lower stocks. What do you think?
Yeah, I think he will eventually be worried about the stock market. I think that still is the barometer to measure his success. But I do think in the short term, he will let markets behave, the way they're behaving at the moment and let that ride. But eventually, you will get enough people coming in complaining to President Trump, and that will eventually start to, take a toll. So I do think in the short term, we could see more pressure here, but I do think as we play this out a little longer term, I do think that Trump will be watching that market carefully, and in the end, I think he will, result in lower tariffs.
So I suppose there's a wealth effect as well. Richer Americans, if they see their stock portfolio go down, will be likely to cut discretionary spending.
Well, that's the key thing, right, is that Trump does not want his economy to weaken. And if people have their confidence erode because of the stock market, which means they're going to cut back on their spending, well, that's not going to be good for U.S. stocks. And, of course, not good for U.S. GDP as well. So all those things are going to be important to Trump. But I think, again, in the short term, I think he's made a statement that he's going to be, watching. That being said, we've seen him flip-flop many times, whether it's on the tariffs or others. So who knows what next week's statement looks like.
And we've seen commentary that his agenda is partly a lower U.S. dollar to improve the U.S. Trade balance.
Yeah, I mean, that's going to be interesting because the U.S. dollar has been relatively still strong compared to most other currencies. It has lost a little bit relative to some of the other world currencies in the short term, but it's still the reserve currency. It's still the currency when you have uncertainty in markets. So he's not getting through that, strong weakening of the U.S. dollar by having this tariff uncertainty going on either, right? I think it's counter to his policy of a weakening U.S. dollar.
So EAFE, which remind us what EAFE is. It's a bit of investment jargon.
Yeah, Europe, Asia, Far East. So, I mean, in that category, it's international markets outside Canada, U.S., and emerging markets. This is a market where we think there is going to be some potential upside here. The reason we say that is because, one, it hasn't been hit with the tariff situation quite yet. I think eventually it will have that conversation. But the expectations were exceptionally low in Europe. When you look at what was going on in France, there was some political uncertainty that's now a little bit more resolved. Germany is having a very difficult time, but seems to be stabilizing a little bit. So the bad news, I think, is already priced in. And what's not pricing is potentially just turning of the corner. So I think there's some upside here. We've seen Europe outperforming Canada and the U.S. Year to date. I can see that continuing on in the short term. But again, the key question will be is when does Trump go after Europe on the tariff side?
And you are making a bet, though, relatively speaking, going overweight on emerging markets.
Yeah, and that's predominantly a bet on China. we think that, coming into the year, there was a high expectation of Trump being really focusing on China. And we really haven't seen that. I mean, Canada and Mexico got hit with the potential 25% tariffs. China only started off with 10, and then this additional 10. That's only 20%. So it's lower than Canada and Mexico.
Less emphasis on China than in his first term.
Yeah. So when you're thinking from that perspective, that's a little bit surprising, given he talked a lot about China during his pre-election campaign. So, and we've seen China also put forward some stimulus packages. We're seeing some stability on the property sector side. So if we can get lower tariffs in China, one of the biggest economies in the world, then I think that's very bullish for emerging markets, especially given the depressed values that they were at prior to the year. We've seen a good run-up already, and tech names in China are really bouncing back. They were at a steep discount to the U.S. peers. So I think there's a lot of potential upside here. But again, I don't think we're done at 20% tariffs on China either. I think this is just stage 1 or 2 in a longer plan, which I don't think is still fully played out in Trump's mind either.
Without getting into specific stocks, I'm thinking about Alibaba, BABA, or Baidu, BIDU. Broadly, the big global Chinese tech stocks looking decent.
Yeah, I mean, that's what you're seeing. You see a big surge in those names. Some of them are up 30, 40%, some even more than that, right? It goes back to maybe what the Mag 7 was doing a few years ago, right? So it's a bit of a catch-up story there, but also, as people are starting to rotate, which is one of the themes that we thought we would see this year, rotation would be maybe out of the Mag 7 to some of the more less tech names in the U.S. market, but also geographically, Europe and China are other examples. So that's why we're tilted a little bit more away from the U.S. at the moment. But again, that's only the short term. I do think we're going to get back to the U.S. Once some of this gets resolved a bit.
We just looked at the MSCI iShares China soaring.
Yeah. Yeah, it's a market that has been under the clouds for quite a bit of time.
Yeah.
People have not been investing in China. They were unsure about what the political situation was going to look like. But now you're getting really good value, especially if you're a long-term investor. And so dipping your toes into China does make a little bit of sense because you're getting a really good risk-reward trade-off here. And particularly, now that we've seen life in the China tech names, I think that was what was lagging over the last few years. And now we're seeing some momentum there. And that should fuel a pretty good rally here.
It's interesting, though. I didn't realize around that 2021 period that that index had run up so much.
Yeah, it's the same thing, right? And if you go back to some of those periods, we had seen a lot of pressure in China that never resolved, and therefore you saw China stocks do well at that period of time, and their rotation of what they were going to be focusing on. We're seeing a bit of that now, kind of a moment in time where they're focusing back on growth. They're adding some stimulus into the thing. And consumers are starting to feel a little bit better. Their savings rates are starting to come down, which means they're spending. So these are all the positive things that we see going forward. I mean, overall, I think the Trump situation and the tariff situation is going to be unresolved for the next month or two, if not. Markets do not like uncertainty, and that's why they're very volatile. But once you get some sort of certainty, and I'm not saying 0% tariffs, but certainty, companies can price in, how much they want to spend on inputs going forward. They can price that in. They know where to build their plants, whether it's Canada, US, or China, or Europe. But also investors also know how to price stocks a little bit better than they have right now where there's too much uncertainty.
Sadiq, thank you very much.